and has been a great partner of ours for a long period of time. So I'm excited today to talk to Elise about lending.
Hey. Oh, thank you for having me.
Yeah, absolutely. So I guess let's kick off just to let people know a little bit about you and how long you've been in the business. Kind of how'd you get going in lending and starting your process? Was that the first thing you picked out of college? Was it
No, not the first thing. It was the second thing. The first thing I picked was being a financial advisor, and very much in the same line of business. But during college, I worked for a small residential brokerage. This is in 2000. I'm giving away my age. 2006, and pretty much, the housing industry was just going up, and I got in it at the wrong time, in my opinion. But in 2008, when it crashed, was whenever I got into the business, and they were restructuring how lending was going to, basically the horizon of lending in general.
Wow, I can't believe you made it through. That's how you started your career?
That's how I started. So I started very low. And then, so now everything, rates going up, is not that big of a deal whenever you start when they're, 8%.
Yeah, that's crazy.
I've been through a couple of the refinance booms. There's been, once they dropped to 5, then they dropped to 4, then they dropped to 3.
Right. I mean, it was a good couple years, the COVID boom of refinancing. Yes. It was intense for a long period of time where everybody was refinancing, yes, or they were moving, right?
Right.
One or the other.
And it's like the second or third time they were refinancing because, we thought once they dropped to 5, they weren't going any lower than that. Then once they dropped to 4, they weren't going. So, I mean, you basically refinance the same person every year.
Yeah. Right.
I think we're done now.
So you have a good CRM and all that now.
Yes, I have a really nice base.
Yeah. But that's crazy. I can't believe you made it through that without actually giving up, right?
Yes.
You would think some people might. That kind of shows a little bit of resilience, right? I mean,
well, and I mean, I was hungry and I was young, and the good part is that I never learned the subprime lending. So I never learned the no doc, easy way of doing it. And so anytime we have guidelines, I was very much just learned in that area where other people are unlearning the bad habits.
Yeah. You seem like a rule follower.
I'm very much a rule follower.
I mean, I would think you're pretty much a rule follower.
Yeah, I wore my mask everywhere.
You wore your mask everywhere?
I made my kids wear their mask everywhere.
Well, I still got a mask in my car, so I'm not going to lie.
Got my shot.
I follow the rules to some extent, but I mean, I like to push a little.
Yeah. Live in that gray.
I mean, yeah, you got to have a little bit of both, right? I think the world needs a little bit of everything. So let's, I guess, jump into why people would tune in right now to listen to our conversation is just where is the current state of the market? It's kind of going bonkers. It was up way high. Now it's, the interest rates creeping up, and the market's trying to readjust, and different price levels are seeing different points of pressure. Yes. And it's just going, what is your take, just 2 seconds on what the state of the market is right now?
So the housing market, we're talking financial market.
Yeah.
The financial market, investors are being very conservative. So the secondary market is basically hedging their bet against the rate hike in July.
Sure.
So they've already packed that into the pricing, whereas what we're seeing is jumbo lending. So anything over in our market, 647, 200 loan amount. Anything above that, you're actually getting a better rate on jumbo pricing because they have not packed in those fees just yet. And by better rate, I mean a quarter difference. But that's a very interesting shift because we've never seen that. Jumbo pricing has always been much worse. And for the longest time in 2008, they pulled every product off the market.
I remember that.
Yes.
Yeah.
So now to have that market be the most aggressive competitive market is scary because of inflation.
Sure.
Right. But it opens up the doors for a lot of buyers and people that want to refinance. As far as the market, where I see it going, last 2 months, the market jumped up 2.5%.
Right. It's been
every day.
It's been a lot, right? I mean,
it has.
A significant amount in the last 6 months. I mean, even if you talked in January, it was, 6 months ago was not even in the discussion of where we are right now.
Right. So, I mean, in March was the last month that I closed something in the 3s. Everything else has been in the 4s. And now we're doing 5s. Right? Yep.
I'm seeing 5s.
Well, now we're locking in at 5, but I'm still closing in the 4s because of April. But yes, today you're a little over 5.5.
Yeah.
Great credit, conventional.
Yeah. And I remember, several years ago when we started seeing 5.5, it was pre-COVID. It was, I forget what year it was, maybe 2017. 16.
Yes,
I don't know if you remember.
Yeah,
that.
it creeped up around
creeped
Christmas.
Up, and then the market went whoop.
Yes.
Like tightened up and then back down. But I don't have a feeling that's going to happen this time.
And I think a lot of lenders are hoping that happens so they can, put food on their table.
Right.
But at the end of the day, it's not a wise investment to float a rate right now or to wait for the market to change, because what it's showing is that it's only going up.
Yeah. And I mean, from the real estate perspective, I mean, what I'm seeing is just inventories are still drastically low.
Right.
And so houses are still getting offers at full price, list.
Bidding wars,
multiple offers. I'm seeing I had appraisal gap come in just a second ago before this. I had another 2 appraisal gaps this weekend. So, I mean, I'm still seeing on purchase agreements pretty competitive.
Right. And I think, with COVID was the first time we started seeing what's called escalation clauses. I mean,
for sure.
I never had heard about that.
I didn't know about it.
Yes.
I was like,
So, I mean, buyers are going in assuming they're going to have to escalate the price over the offer just to get a deal.
Yeah.
So that's very new. So you are seeing some appraisals come in short, but buyers are willing to pay the gap.
I mean, that's the case, and we've seen that time and time again. Over this weekend, we had 3 appraisals come in under.
Yes.
Imagine these phone calls. I'm still negotiating one of them. That I'm gonna have to take after this podcast.
Right.
Of negotiating a low appraisal, and it's just the market is so cooked up.
It is.
But it's and the appraisals are not coming in line, and it's like you've got 20 offers and they're all telling you the same price. They really are. Right. Usually they're coming around the same price. It's coming down to terms, and what's interesting too is it comes down to small terms like inspection,
waiving the appraisal
or appraisal or inspection period or escalation clause or
closing date.
It's interesting, or a termite inspection. It was interesting where the buyer took on the risk of the termite inspection and took on everything. And
yes, definitely
even a small
market.
thing like that was the difference between a deal.
Oh, yeah.
One time, they were same thing. They both had escalation clauses. The only difference was a termite inspection, which is like $100 item, but sometimes those things can make a deal if you structure them the right way.
Yeah. Oh, absolutely. And, I'll tell you this, that just from a lending standpoint, the way we're trying to help our clients that are buying and in this market, in this environment that we're all very green to, is we're basically underwriting the file on the front end.
Right.
That way we can meet that closing date if we're competing against a cash offer. Because otherwise, there's no competition.
Right.
Cash always wins.
I would say so. I mean, we just got a cash offer too today, and it was, the seller accepted a contingency offer, which I hadn't seen in a minute.
Yes.
But he did, and then an hour later, the contingency is getting hammered with a full cash offer. So the contingency may have won for a day, but it's going to get hammered tomorrow, right? So even in this market, you could think you've won or have a deal, and you have a contingency, and the cash comes in, and you can't remove the contingency, and it's tough.
Actually, one of my former clients was paying cash for a deal, and this is a couple weeks ago. Went $50,000 over list, all cash, no appraisal, and lost out. And that's the market we're in.
Really?
Yes.
Where was this? This is in
Baton Rouge, and it was a tear down on I don't know if it was, I think it was Ingleside tear down. So basically,
90210 Baton Rouge.
Yes, yes. So you're paying about $500,000 and $50,000 over to get a house to tear it down, and that's where we're at.
That's where we're at. Some of those lots on Ingleside, like one of them $500,000 for land.
That was what it was. It was 500,000,
I think
50,000. Yeah.
So I'm on the same deal. Okay.
Yes, okay.
I didn't know who bought it.
No. I wasn't
but
the
I was
lender.
like, that's a lot of money, dude.
It is.
I mean,
but it's also scary from the standpoint that year over year, the real estate market, from each year, you're looking at maybe like a 4% increase in value. And from 2019 to 2022, don't quote me on this statistic, I read up on it after Trends, which basically looks back at the housing market and says, this is what's going on. And across the board in the greater Baton Rouge market, it was a 54% increase. Which is massive considering that year over year it's 4%, which just basically shows this is where inflation is going. And the days on the market where they're typically 60 to 90 days, they went all the way down to 7. New construction, 0 days on the market.
Yeah, the 0 days on the market for new construction is the deal, right?
Yeah.
So we obviously service a lot of contractors, real estate investors, and we've noticed that too, man. Some of these guys, they don't even really need our product is so efficient, right?
Yeah.
But they don't even necessarily need us. Like they don't need us.
Well,
some of them don't, some of them do, and it could get a higher price, and there's all kind of things. But we've seen they're not building specs, they're building customs because there's so low inventory that now they're not really building specs. They're just
but they can still use your knowledge because the escalation clause that became, the hit term for the real estate industry post-COVID, it can now be applied to builders with the rising cost of materials and things like that. They can put in there an escalation clause that, hey, if prices go up by X amount, you agree to go up to that because they are the sellers.
I know a builder that had to go back to all of their purchase agreements and ask for $30,000.
So basically, if you did the escalation clause on the front end,
they had to renegotiate every single contract on all their deals because of the inflation.
Rising price.
Yeah, I mean they were just
Delays.
passing along the cost of the lumber and the other materials that was increasing. I mean it was justified, but that's the kind of stuff we're living in here that I haven't been used to. I mean, I've never seen it, so it's just how does the market keep up with the appraisals? How does the market, cool down? And I think the rates going up is actually not necessarily a bad thing. Like, I know that sounds crazy from your perspective.
It is.
Because of your business. But I would say, I think, the market needs to cool a little bit because it's insane. The amount of offers I get and the amount of deals that come through. And it's almost so intense on buyer agents and so intense on buyers that it's just really not sustainable.
Right. Absolutely. And I mean, to cool off from 150 degree temperature of a market, it's not really. It's still a hot market. Even if it cools off,
it is.
It's still going to be historically something we normally don't see, and we haven't even. This is the beginning of our selling season, typically.
Right. I know. It is kind of interesting. Like, I wonder if there's going to be a shorter selling season or a longer one.
It is,
given to this. I can't put the tea leaves on it, but the deals are going under contracts. I'm getting deals, so it's definitely not cooled at all.
Right. No.
Even though that the rate went up, I mean,
right.
My sellers are worried. Some of them are like, hey, is it going to affect pricing? Do we need to take that in consideration? And they're trying to beat the market a little bit.
A little hard to beat the market. And I mean, at the end of the day, if you take it into consideration, you could have a bidding war and an escalation clause and still get what you want.
Yeah.
Without being greedy.
I would agree. I mean, there's definitely ways to structure it. And, we've seen that. A lot of times, though, we've also seen buyer agents that do escalation clauses that are planning for it, but are assuming that the appraisal is going to come in good. And then the buyer doesn't really realize what they agreed to.
Oh, wow.
Completely. Like that, because the agent is telling them, oh, we're going to get it appraised. No big deal.
Right.
And
assuring them of that.
Yeah. Which you typically can, I mean, especially if it's only 5 or 10,000 over list,
Depends on,
But that $5,000 is a lot of money to a buyer that's got to pay closing costs.
Exactly.
And that's got to pay, all kind of stuff, So, I mean, it definitely is a huge consideration and not something you should just sign off on. You definitely need to get good advice.
Right. Oh, absolutely. And also, verify that they're willing to cover that gap and they know psychologically what they're doing as well.
Right. There's no doubt. So, obviously lending is a long process. It's something that navigates that you and I do every day.
Yes.
We know you and I are speaking about rates and
escalation.
Everybody in this thing is probably like, what are you talking about? But let's break down like the steps kind of just of like lending. I mean, the first step of buying a house is no doubtably figuring out how you're going to finance it.
That's exactly right.
I mean,
how are you going to pay for it?
How are you going to pay for it? No money, no deal. Right. No money, no deal. That's just
right.
Is what it is, And so you've got to figure out. And a lot of buyers are not are uncomfortable with that conversation because they want, they don't want people crawling up in their finances or into their things, and they feel guilty about it or self-conscious about, oh, I didn't pay that one person that one time, and they have all these like insecurities built into it. But the best way to find out where you're at is to find out where you're at. Right?
Well, and I kind of like what my take on it is. It's like going into a mall. I mean, we rarely go into the malls anymore, but you go into the mall and everybody starts hounding you. And so you don't want to act like you're looking for anything until you're ready.
That's my view.
And I think that is, it's basically a negative way of looking at buying a house, because if you apply with a trusted lender, they're not going to hound you.
No,
they are going to
not.
approve you, and you'll be, from the time we pull your credit. So it's step one is submitting an application. You can do it online, in person, on the phone, and that doesn't obligate them to anything.
Right.
And not only that, yes, we have to run your credit to see what you qualify for, because financing is always contingent on the credit score. However, that credit is good for 180 days. And if somebody else runs your credit, it's all within 45 days. It's all a one-time hit. So there's really nothing to lose by having your credit run, to know where you stand. And I also think it's nice to have all that on the front end so that you can be an aggressive buyer.
Right.
And put in an offer and have it already underwritten and just, not worrying about that other shoe falling.
Right. I mean, you can't shop for a house if you don't know what you're going to buy.
And you don't want to shop all within the time of a purchase agreement, because it's just that overwhelming stress.
I would agree. And it's just too many things. And you also don't want to go down a road that you think you can go down, and you got to go down a different road, or especially with the rates and the way things are happening, you ebb and flow, and you really need to get good advice from people that can tell you the right steps to take. What's the best way to set up? What's the best loan structure, right? There's like a million different ways to skin the cat. That's a whole nother thing that buyers need to realize, is that there's not just one size fits all. There's a lot of different programs out there, and you have to get in front of somebody that does this on a daily, that can actually give you in the right loan or the right structure that'll benefit you and your family. Right?
Absolutely. And there's a lot of misleading information on 20% down is the best way to go. Well, the market's shifting. Cash is king. Hold on to some of your cash. You can, first-time home buyers can put as little as 3% down. And PMI had a bad rap in 2008 with the crash, private mortgage insurance. But it's really not that bad,
right.
And additionally, the market is changing as rates go up as well. And lenders are kind of, rolling with the way the market's going. And by that, I mean offering different programs such as renovation loans or construction loans or home equity lines and things of that nature that can really help a first-time home buyer that, may not see what they want on the market, but have the ability to put their own touch in it.
Yeah, we've seen, there's a lot of real estate startups focused on that, that have raised a lot of capital as far as streamlining the home buying process with, making yourself a cash offer and HELOCs and all these new inventive ways to finance.
Yes.
And I'm like, some of them sound great, and some of them I'm like, I don't know if that's a great idea.
Yeah,
right?
It's hit or miss on those for sure.
It is. You don't know what's the best option, but there are a lot of those options out there. It's just you need to consult with someone that knows what they're doing,
right?
Because you don't want to put yourself in a bind where now you're paying 2 mortgages and you're in a tough situation, or something's going wrong, and you really have to make sure that you can exit your other property if you get a HELOC or you do something else. Like, you need to have really good advice, right?
Right. So a lot of those people that were had their house and bought another house and didn't want to list their house might be stuck with some collateral right now.
Especially if the market changes, right? And days on the market go up, and then now you're paying several different notes at the same time to
absolutely.
And it's not the end of the world, but it's just stress. Right?
It is. And so having your ducks in a row on the front end, because it's going to be a very stressful situation, regardless of how smoothly it goes when you're buying a house. It's stressful. You're moving.
I would agree. I would say that's what I said to somebody this morning that's going through something. She's selling her house, and they're moving to another city. The city's really competitive.
Yes.
And they lost out on a deal. Now they don't know where they're going, but they're selling their house. They have no idea.
Right.
It's a lot of stress.
It's a lot of stress.
I mean, and there's no way for me to make it easier for her. Right.
Well, and
not
you don't
really,
want to add to that stress either.
Right.
You
try to.
So you don't want to say, all right, I'm gonna not only do this stressful situation, but I'm gonna get pre-approved after I get the contract. No. Do it all on the front end.
That's right.
Know what you can afford. Check in with your lender. And a good lender isn't going to hound you for your business. They're going to be respectful. That's always been something that I have in the back of my mind, because I might want new lipstick, but I'm not going to pretend like I need new lipstick, because I don't want every cashier to come up to me.
Yeah.
And I think that home buying has kind of become that as well.
That's for sure. It is a competitive space, and I guess that kind of brings me to shopping lenders, because that's what you're basically alluding to there a little bit.
Right.
Is that there's so much competition for a loan that the lenders are hungry, and then they call and they bang on the phone so much,
exactly,
and then they're so you don't want to open up that thing. But that's why getting with a local trusted lender is the way to go, in my opinion. That someone that has a bigger book of business, that has done a lot of deals over several years, that has made money, so they can have light months. And same thing with realtors, right?
Right. Oh, absolutely.
You want to have a realtor that can walk away from a deal for you if it's not if it's a bad deal for you, right? They're not worried about paying their car note or their house note on one deal, and so it definitely picking a good, proven agent and lender is extremely important.
Right. And you want to look at their workload too. You don't, some of the top realtors aren't the ones that are holding your hand during the process.
For sure.
And same with the lenders. So I think that that's very important. But additionally, I find that, and this is, lenders always have to disclose all the facts. They all just disclose differently. And so knowing that, don't just look at the rate, look at the cost. Right. And, do you feel comfortable with this person? And what I find more than anything is I can offer my advice, and they go to somebody else and just tell them what I told them and lose deals. But at the end of the day, that's more of a moral issue. I find that with the real estate world and the lending world, you've got to be safe and know that you're going to get what you pay for. And you have to trust who's on your team. It's a team effort getting into closing.
I would agree. It's a team effort. And that's, at the end of the day, that's what I'm trying to get to and want people to know is that picking a local lender over a big box lender is more competitive in this market.
Absolutely.
Just straight up. If I have 8 offers coming to me for a listing, and I see your name on it, and I see some random in Nevada, I'm gonna pick Elise if all things else are considered the same, right? No, I'm not. It's not the only thing that's considered in the deal. There is cash, it is terms, there's inspection period, there's a million other terms, but the lender that you pick is an outcome on how competitive your offer is, as well as the agent.
Which also means if you switch lenders, you need to notify the seller that you switch lenders, that, hey, I got a pre-approval from Elise, and then you switch to, some no name in Nevada, it changes.
Well, here's what real estate agents, if you're listening out there, if you switch a loan, you have to do an addendum to let the other person know that you're switching the loan. Had a deal do that. Guess what? This property won't go FHA. You know why it won't go FHA? Because of the flip rule.
Yes.
You know why? You know why? Only person, and it was written in the realtor remarks, but this person did not read it. They did not communicate that to me. They switched, and I didn't pick up on it. They sent me an email for me to sign an addendum, and I just didn't pick up on it. But they never notified me or picked up the phone. They sent me an addendum randomly a week later, and then I'm like, wait a minute, what happened? And then I figure it out, and the deal blows up. And everybody's mad. But if you had a conversation and picked up the phone and called me, it never would have happened.
Well, and from a lending standpoint, it really does help whenever, and I do this personally, if I get beat out, I will call the listing agent and let them know.
Yeah,
because it does change things.
I would say that's the other thing. Like, I think that's really good, awesome competitive advantage is the service, right? So picking up the phone when there's a multiple offer is very impactful. And I know that some people balance the fact of disrupting the listing agent, right? Versus giving them information. But a call from a lender is enormous.
Well,
because dude, there's some lenders I can't get.
Right.
Like I can't communicate with. They don't even answer an email. They don't answer the cell phone. They don't.
Exactly right.
You know what I mean? Like, and for someone to pick up the phone and say, hey, this person is pre-qualified. They for sure are good. We've vetted them. We've gone through the process. We've actually looked at their records. This isn't just a letter that was rubber stamped and sent to you.
Right. Absolutely. Just giving them that confidence that, because when that loan closes, the listing agent looks just as great because, we verified all that on the front end.
I would agree.
Everybody wins.
No, so that brings me to my other point, and I guess I'm kind of taking your gusto and talking about real estate more than lending here. But when you're listing property right now, right? Like we said, the market is so hot, it's so fire. I'm getting 8 to 10 offers. So it's not, and they're all the same purchase price or the same terms in relation. So it's like you're picking a horse to figure out which one you want to get on that's going to get you across the Kentucky Derby finish line.
And
right?
you're doing it as a representation
for
a seller, and they're trusting you with that.
They're trusting you with that. And next thing you know, 2 or 3 weeks or 4 weeks is gone, and they've had their house off. It's just stressful.
It is.
Right? I'm dealing with this with one of my real estate investors, and it's just that every time we deal with someone in this market, in this area of the state, it just is a train wreck, Well, and I'm like I can't pick a winner. And it's like, how do I pick? And then the other thing is, buyer's agents, stop lying, right? Stop lying to me.
Right.
Because what they're doing is they're just writing paper, and the buyers sometimes, like, they book an appointment and it's a preview and they haven't even seen it. And then I call them, they're like, oh, the buyer loves it. Buyer didn't even see the dang thing.
Yeah.
You know what I mean?
Absolutely.
Or they're like, you know what I mean? Like, there's like stuff like that going on in the market where they're just throwing paper around to hope to hit in some of these markets, because then, number one, they don't have that many deals, right?
Exactly.
And again, it gets back to how many deals does that agent have? And
and when you get hungry, you start cheating, and
that's what happens. I mean, that's what happens. And you got 10 offers, and it's like, how do I pick the best one? And it gets really, and that's where it gets back to picking the right lender and picking the right agent. And that's extremely important. When I'm looking at offers and I'm looking at 15 offers and giving advice, that is paramount. So,
absolutely. And I mean, at any given point in time, just like Amazon, if you're looking through products, I don't know about you, but I see how many reviews are there and what is the rating. I mean, nobody's gonna be a 5 out of 5. Let's be honest.
Oh, bull! Go check out Falaya Real Estate, baby. 5 out of 5. Yeah, but it's probably someone's gonna, after this thing, is gonna go rate me. It's bad.
No, I'm gonna rate you right after this.
All right.
But I look at how many reviews have you had? What are they saying about you? And, you want to read the good ones and the bad ones, because there's always going to be some one-offs, too. And some people are going to give you a 5 and didn't deserve it.
Right.
However, assurance has that to the buying agent, the listing agent, the sellers. not the sellers.
Yeah.
Correct me, the buyers, and they can rate their loan officer and their experience. And this is all on the Assurance website and also in every email. So I like I tell the listing agent, just go look at my reviews, especially in out of state areas where it's not a local lender. I'm not a local lender in Texas, but it provides that assurance that they're going to make sure they get it to the closing table.
Yes, that's awesome. Where are you writing loans? I guess we kind of did some research. I think Jacob and I looked. You're doing loans in what states?
What states
Tell
am
people.
I writing?
Tell people.
Yes. Okay. So in 2008, when the market crashed, you had to get individually, unless you were employed by a bank, you had to get individually licensed in the states that you were writing loans in.
Right.
Which means I just took a bunch of tests, and I am licensed in Louisiana, Texas, Florida, Mississippi, and Alabama.
Good deal. Well, we just applied for Mississippi, so we're heading on. So there might be some
deals
ways to
in the
team
future.
up. Yeah, absolutely. So we'll have to see, and hopefully some more coming. So that should be good. That's awesome. I know, when you expand your reach like that, especially for Louisiana people, because you have relatives. I think the Southeast is really connected. So what you're,
right.
People that know people that live in Atlanta, that live in
Texas, Florida,
Houston. Yeah. I mean,
Mississippi is like a hop, skip, and a jump
it
away
is.
from like St. Francisville.
A lot of people. I mean, we have a camp in Woodville, so
right.
I mean, there's a lot of people that go up there too in Natchez, and so. We shall see, obviously, so hopefully we can do some deals and expand. And
absolutely.
And
yeah. I mean, I think a lot of people are, with the job market now changing and COVID allowing you to pretty much work wherever you want. If, you're remote, we're going to see more people moving into different areas.
Oh, yeah. I think remote work is only going to,
right.
expand. We got Jacob moving to Lafayette, so he's going to be, in a different area. I think more people, and you had Airbnb doing remote work. So I think where people buy and where people move is only going to change over the next 10 years. And I think rural is going to become bigger than you think. Because
you can get more land, more space.
Lower cost of living. Plus you get competitive. If you're still working for Airbnb, being paid huge amount of money,
right?
But you can live in Mississippi with low cost and have a lake and a big old 500,
lower taxes.
Lower taxes. No state income taxes.
Yeah, no
in
noise.
Texas. Yeah, right. But I'm a city boy at the end. So
same. I'm a girl.
Yeah. But
same.
Anyway, so I guess what do you think? So rates are going up. I guess my next question is do you think the adjustable rate mortgage will make a comeback?
It is making a comeback.
Is it really? Okay, so I don't know. I haven't seen any yet on purchase agreements, but I'm interested that if you're thinking that's going to make a comeback.
It is. I really, since the time I have been in the industry, so a lot over a decade. I have done maybe a handful of them just because it has never been competitive. But with rates rising, I do think you're going to see them make a comeback. I think people are going to be hesitant for them, just given the bad rap it got.
So what's the mechanics of a adjustable rate mortgage?
So there's with an adjustable rate mortgage, you can do different terms where the interest rate is lower on the front end and it's fixed for a certain period of time. 3 years, 5 years, 7 years, 10 years, after which case it will adjust given a certain amount of time. It might adjust every year, it might adjust every month, just depending on the product you're in. But basically, it's just keeping you into a low rate for a short period of time. And it's for people such as, a doctor that's, moving to California to get his residency and knows that he's going to be leaving and taking a job in Baton Rouge. That's a wonderful product.
Right, because you're going to move within that low rate. Lower payment. Yes,
right,
if you know you're going to be moving in that 5 years, that's true.
Right, so I mean, so things like that, or vacation homes that you're going to move into another vacation home down the line, or
get out of.
Yeah, or you're gonna you're going to sell your house and pay off the adjustable rate mortgage.
That's the other thing
years.
is people just look at it as a balloon and pay it off at the end.
Right. But if you have, a lot of people that are downsizing and they have a big house, but they don't want to rush they'll get an adjustable rate mortgage and know they're going to pay it off in 3 years.
Right.
So it's a niche product, but I think it's gonna come alive in the market again here soon.
Yeah. I mean, I don't see that very much. I mean, what I see a lot is rural development, FHA, VA, and conventional. That's pretty much the gamut of what I see on a daily basis. And I think, we've had a lot of pressure, in this market, whether, hey, just accept conventional or just accept FHA, VA. Like, what are the downsides of this or downsides of that? And it's been like a huge talking point in this market because you have to be competitive, right?
Oh, absolutely. And you want the whole story.
Yeah.
Because just one little piece of that puzzle could break that deal up. And I think that, historically conventional has always been your strongest, most aggressive product, aside from cash. But I think it's, wise to know why they're going certain products and having the lender talk to the listing agent on that.
Right. Yeah. Because there's a lot of different reasons why you do that. And
right. And rural development is 100% financing, and it historically took forever to get closed, which is not the case anymore. And it's actually a really wonderful product.
I kind of agree. I think it's actually, especially I've seen it getting even more and more efficient over the last 2 years. They have been closing deals quickly. Right. There was a point at which it was 90 days that became a problem. Right. I remember when it was so backed up that it was you were taking at least 60 days to close it.
Oh, yeah.
And that was if everything went right.
And nothing changed.
But now I'm closing them in less than 30 on some
Absolutely.
of them.
So they got a new system in place.
Okay, is that okay?
Yes, and now it's on a 24-hour turn time. You can actually go online and see what day they're working on.
So great, man.
But that was a huge
opens up the
change.
housing market to so many different people on so many different levels. That's great to see.
Yeah, and just to be able to guarantee that from a lending standpoint, because we have no control over when rural development is going to issue the certificate. However, when you can see that it's 48 hours, you have a little bit more certainty that you're going to close it in 30 days.
Yeah. And I love the VA product. Obviously, I love supporting veterans and everything that they've done for us. And who doesn't want to have a zero down loan
with no PMI?
With no PMI. Mm-hmm. You know what I mean? I actually talked to some of these real estate investors who actually built their portfolio by, playing by the rules.
Right.
But they live in a property, they get zero down, and then they would move or build up their portfolio slowly over 20 years, but they did start to pay off deals and built up equity and then turned it. And it was
you know what? They're fighting for our country. They deserve the best product, and it is by far the best product on the market.
It is, right? If you can get into it in that, and I'm seeing those deals get closed extremely quickly as well. So
yeah, so a VA loan, while we have to order the appraisal through the VA, that's usually where your delay is going to be because they have 10 days to get it to us. However, it's still underwritten by the underwriter at, whoever your lender is, whereas RD has to sign off on theirs, rural development. But VA, not only that, if, for disabled veterans that are claiming benefits, it's a 0% funding fee, which is that fee on top.
Sure.
And also, too, they can not only claim homestead in Louisiana, Texas, I think Mississippi and Florida as well, but they can also get reduced property taxes if they're disabled veterans, which they don't. A lot of people don't know, but that's a huge savings for them. It's homestead plus reduced, and it kind of freezes there. That's nice.
Yeah, and that should be there, right? That's just exactly what should be being done for them. So, all right, we talked about loans and the type of loan. So now you've started the process. You're moving through it. What should you not do during the process? There's a lot of not do's.
Yes.
When you
there's a lot of do's and not do's. Yeah.
Yeah, do's. I should say do's too. Like I think you want to like make it happy too. Right?
Yeah, right. So I mean, first things first. I always say, I mean, so this generation, we're so quick on the phone and everything. You don't necessarily have to make, phone conversation with your lender, but it helps to know who you're dealing with. Sure. So I say that you submit your application. If that lender is not getting back to you within 48 hours, I would go ahead and say you probably don't want to work with them. Because it really just sets off the whole experience that if they're doing that whenever I'm shopping lenders, what are they going to do whenever they have an active loan?
Right.
Am I pushed to the back burner? And I think that that's where you can really determine customer service on the front end is how you're being treated just from the jump.
Right.
So once you submit your application, while I cannot tell you to upload every document that you can, it helps so much because, some people don't know if they should use gross income or net income. And if you upload those documents, it allows your lender to review all of it. Right. After that, I would say do not go purchase anything in which they would run your credit. That includes Home Depot for appliances. Do not open up new cards because lenders don't rerun your credit, but they monitor it. So any new pull on your credit, saving $5 at Dillard's, don't do it. Don't do it. It's not worth losing the house. So it doesn't mean that it's a deal breaker, but it just adds more headache. And if you wait until after closing, that's great. Don't switch jobs without letting your lender know, or just don't lose your job without letting your lender know. Don't get married without letting your lender know. Any big life changes, and don't make large deposits. By large deposits, it is considered 50% or more of your monthly income. So if I make five,
really?
Yes, that's good too.
50%. I didn't realize that.
Let's just say I make $5,000 a month gross, and so I would say do not deposit anything into your bank account that's not a pay stub, that can't be traced, that is greater than $2,500, because otherwise we're going to have to source it. And again, all these things are roadblocks, and we can get it to closing, but just to make the process easier.
I did not know that it was that low of a threshold.
Mm-hmm.
Like I was thinking it was like
it's all relative.
I guess it's all relative percentage of income.
Now, again, you could deposit and, cash, and you could deposit something in your bank and you can source it. It's fine. It's just a matter of trying to make the process easy.
Sure.
And also make your offer very lucrative.
Right. So just stuff your cash underneath your
No,
bed.
don't do that.
Just kidding.
If you do that, just put it in small amounts in the bank, right?
Just go to the bank 10 times. I'm just messing with you. Trying to make you laugh, man. So let's talk about closing costs. Obviously in this hot market, a lot of times you're not being able to ask for as much closing costs because there's not as much support because sellers have more leverage. I would say it used to be standard that agents would ask for $5,000, $6,000 on every deal. I'm not seeing that as much. So, what all goes into closing a loan, and I guess what should a buyer think about whenever they're having to come to the table with cash, and how should they prepare for the process of, closing a loan, or preparing to save, or preparing for the process?
So absolutely. Closing cost, it kind of fluctuates, and right now in our market, especially in Louisiana, we're seeing insurance premiums are much higher. So what was typical, 2 months ago is not necessarily typical right now. But I would definitely take that into account. Basically, just like we go to the grocery store and we take into account inflation there, taking into account inflation on closing costs as well. Not necessarily from a lending standpoint, but from insurance and taxes and attorney fees and things like that. You're gonna see those higher, probably about 25% than what we're normally used to. So, it's all relative to the loan size as well. But I would definitely say to set aside a minimum of $7,000 for closing costs on your average $300,000 purchase.
Right.
Closing costs and prepaid items. So just kind of factor that in. Just like if you were buying a car and you had transfer taxes. Right. That's a good number to work off of. There are options, there are grants and, lenders can give you a higher rate to cover some closing costs, et cetera. But just for your informational purposes, 7,000 is a good target right now.
I mean, that's about what I'm seeing, right?
And closing costs and prepaids.
Right. Which, I mean, it's a lot of money, right? It's a lot to think about. But, I mean, you're making the big decision and purchasing a home, and you've got to be prepared for that. So a lot of people are like nervous to engage us because they're thinking about, and they don't know about this, and they can't think about it. So that's kind of the idea of this conversation. But to get back to your insurance thing, we actually had several properties in Lake Charles where we list property where, man, they
got hammered.
They couldn't even get insurance.
Mandeville and New Orleans was the same.
It was almost to the point where they could not get insurance. It was like we weren't going to be able to close the deal because they couldn't get insurance.
Oh, yeah.
I mean, that is a serious problem that Louisiana is facing. Like, if we continue to have another hurricane season that just, it already took out 4 insurance companies. What happens the next one? Right?
Yes. I mean, a lot of insurance companies are folding, or, you're buying a house and then your insurance jumps up 50% and you weren't budgeting for that,
No doubt. I mean,
even if somebody's on the cusp on qualifying and, their max is $1,200 a month and, insurance goes up, that could push them out of just buying the house in general.
Right. It is. Yeah, it absolutely is an interesting dynamic where,
and I mean, if you apply for the mortgage on the front end, that gives you basically the cards to look at and see, this is what my closing costs are, this is what my prepaids are, this is what my monthly payment is. Have a little wiggle room, keep in mind that rates might go up a little bit, but at least you have a very good handle on what you're about to buy.
Right.
I think that's absolutely necessary, and from a lending standpoint, you should provide that estimate right off the bat.
Yeah, you really should. I guess that brings me to, we're talking about homeowners insurance, but let's talk about flood 2.0. Flood insurance. I don't know if you know a little bit, and I'm going to bring an insurance agent on to go deeper on this. So Elise isn't that knowledgeable, but to y'all out there, flood insurance is a big deal in Louisiana.
Absolutely.
They have changed the rules on how it's allocated and the prices that it goes into, but on top of homeowners, you might have to take into consideration flood insurance.
Absolutely. And I mean, so whenever you do go to look at a property, the realtors have access to all the property disclosures. Read them. Don't just fall in love with read them. It's like Carfax,
I would agree. I think that's the most missed option. On Falaya.com, you can go on every single one of our listings and view the property disclosure. It's public information. You can go on there. If we listed it, it's on there. You can see it.
Oh, that's
you can
wonderful.
see
That is public information.
It's public information. It's not withheld from the public. So the public can go on our site,
that's wonderful.
See the lead-based paint disclosures. They can see the property disclosures. They can see anything that the seller wants to show, whether that's a past appraisal, condo docs, whatever the seller wants to put up, it's going to be made public through our site. It'll obviously be posted to the MLS for realtors as well. But I think it's extremely important to do that. And that's one thing that I think is a competitive advantage that I think more brokerages need to do.
Right.
Because, I mean, it helps people be able to absorb the information and make better decisions, better informed decisions.
Oh, well, yeah, absolutely. Right. I mean, when you're buying in a house that requires flood insurance over one that is not, federally mandated, that could push your mortgage payment up $100+ a month. And it's actually disclosed on that property disclosure, the amount the sellers pay.
They also changed it. I don't know if did you realize that? Yeah. So they've changed it to where you now have to put the flood insurance policy, the amount, everything's on that document now. Where it wasn't 2 years ago, right? It was checked, but it wasn't really disclosed.
Right.
Anyway, it's wide open, so you know what's going on there. And I really think that's extremely important to know if it's flooded before,
Well, absolutely. So something very, very new in regards to flooding, Denham Springs, with the great flood of 2016, that Denham Springs in that area, and it's not just Denham Springs, other areas in Baton Rouge as well. After they experienced that flood, some homes were issued a mandate to raise the home.
Sure.
And Some people didn't. Nobody came out. But if that seller tries to sell that house, there is a lien on there and you cannot close it.
Really?
Without it being raised. And so now we're seeing, this was actually about 2 months ago was the first one we saw. So it is absolutely crucial to know if it flooded, if they were issued any kind of mandate, because you could get all the way to the closing table before we know it from title.
Before title runs the search. Yeah, that's crazy.
And it's very, very new. And they would know if they got the letter. But it's a way that the government's trying to ensure that these flooded and gutted houses aren't just going under the radar and buyers are just buying them without knowing all the information.
Yeah. We actually had someone in my neighborhood raise his house. It's on the back.
Good for him. You can buy that house.
It's one of those old contemporary houses and got raised up really high. I mean,
he's a rule follower. He got that letter. He said, we're doing it.
I don't think you know if he got the letter. I don't know. Maybe he did get a letter. I don't know. It is backing up to the bayou down there, down that way. And I think he also just didn't want his house to flood again. I don't know if it was like he got the letter. I think it was more he just had the money and wanted his house to never flood again. And he wants to live in my neighborhood.
Right.
You know?
Yeah, I get it. I can't blame him. It's just very interesting because, you know, a lot of these flooded and gutted houses have been redone, remodeled, and, you know, the
nice.
neighborhoods are coming back. But, you know, that's something to look at.
Yeah. And that's the other thing is how they actually, you know, do the insurance now. It's on the map, right? So it's no longer on the flood elevation certificate at first, right? It's like on the map. So you can really search and do stuff a lot quicker than you used to, which is so you could do diligence extremely quickly without having to pull a flood elevation certificate and kind of get a rough estimate of where you're going to be. You know, where 2 years ago, it wasn't as easy to do that, right?
No,
you kind of had to have that. You kind of had to have that document, and you had to have that to present to the insurance provider.
Yeah, not having to deal with an elevation certificate is actually a huge deal because that was what basically held the process up.
Oh, all the time,
right?
And those guys were, you know, having to go out there and measure and do all that, and
at the cost of the buyer.
Yeah,
you don't even know what you're going to get.
Yeah, you don't even know what you're going to get, and then if you get it, and you kill the deal, and then it's all that money waste.
Right? Exactly.
I mean, it was just really. At least now you know. The only time I've been told you can contest it with the flood elevation certificate, but you can't. That you can get an amount loan. I mean, an actual insurance amount immediately from the address, but if you want to protest it, you can.
Yes. You can. I mean, you can do whatever you want, right?
Yeah.
But you can.
I mean, you can get private insurance,
and you can. Yeah, and you can. Private insurance is actually going to be a new thing to look at as well.
Agree.
Yeah.
You know,
absolutely.
So it's going to be interesting how it develops. I guess, you know, if we continue to have, you know, hurricanes and things happen, like how does that develop? I think it's really important for people to know when they're closing loans and closing deals and making sure they're getting themselves in a good situation. It's a big investment, and you want to make sure that you're not.
Yeah, absolutely. Don't always go for the lowest price either. I mean, for insurance, because what if they fold, or what if they shoot up the price next year because they folded? You know, those are things that you need to consider.
It is kind of interesting, right?
It's like balloon insurance, you know, adjustable rate insurance.
Adjustable.
We start off low and then we go up high, you know. And I'm gonna copyright that.
You should. Balloon insurance. It's like
adjustable rate insurance.
Adjustable rate insurance.
We start at this premium, then we go up, but they don't tell you that on the front end.
Then
right?
Ida came, and it is what it is.
Yeah, I'm sorry, and we're not going to be able to fix your roof.
Yeah,
and you doubled your premium.
You need a blue tarp.
Yeah, you're going to need to handle that.
You're going to need to handle that.
Yeah,
but. All right. Well, I really appreciate you coming on,
absolutely.
man. It was kind of a cool conversation.
Yeah.
Hopefully we imparted some knowledge on you on how to close a loan and how to go through the process efficiently. And
now we know the calculation for large deposits.
I would agree. I mean,
if anything, walk away with that.
I didn't realize it was that low. I still can't.
Or just that simple.
Yeah.
To calculate yourself.
I guess to remember. Yeah. 50% is a good number. Right?
50%.
It's an easy number. I mean,
and you can just tell your buyer, like, look, if you make $20,000 a year, you can deposit $10,000. Don't go over, because that's 50%.
Got you.
It's all relative.
All relative.
It's all relative.
Keep it under the mattress. Elise doesn't like that. All right, guys. Well, we appreciate it. Thank you, Elise, for coming on. Assurance Financial. Check her out. What's your site? Do you have a site or email?
Yes, so it's assurancemortgage.com. Elise Walker. I'm in the Baton Rouge office. I have my own page. You can look at my reviews. It also has a link where you can apply online from any tablet, phone, etc. It's very user friendly. But it also gives you that security when you're uploading. You can take a picture of your driver's license, upload it right then and there, and we will keep you up to date as the process goes on. It allows you to have you're in the driver's seat.
I agree, and that's one thing that I really love about Assurance that does a really good job is that they move you through the process really efficiently.
Yes.
And that's really what we're doing here at Falaya, right? We're trying to move sellers and buyers through the process of home ownership efficiently and effectively using technology. And, it very much mirrors what y'all are working on with Abby. With Abby is her name? Is it Abby?
Yes, Abby's our digital assistant because, well, and you can look at Amazon and see that you want a transaction, but you also want a relationship, so it kind of is that same thing. Like I like to track, Amazon, they took a picture of my package. It's here. I feel like Assurance and you guys as well, they, just making sure that you have a little bit of a relationship, but also exactly what's going on at every step of the way.
Yeah, we use HubSpot and a lot of automation, and that's why we're filming some of this content is to give it to people when they need it. Maybe that tidbit of 50% will be the difference maker to getting the deal closed.
Yeah, absolutely. No doubt.
All right. Well, I appreciate it, Elise. Thanks for coming on. Guys, appreciate the time and check us out. We'll see you next time.
Thank you.
Hey, guys, I wanted to take a second and say thank you for watching the Falaya Focus Podcast. At Falaya, we are reimagining the way real estate is bought and sold. So we need all the love and support we can get to grow our movement. Please tell all your friends and family about all the great things that we have going on here at Falaya. Please like, share, and subscribe to all of our content, and we'll see you next time on the Falaya Focus Podcast.